is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Jeffrey Stewart, Managing Director at GPO Fund. Jeffrey Stewart is an investor, serial entrepreneur, and one of the voices behind the idea that companies should think differently about going public. He's a managing director at GPO Fund, a New York-based investment firm focused on founder-led technology companies that they believe can become exceptional public companies. Jeffrey's work sits at the intersection of company building, capital markets, and global growth, making him a great person to talk to about the future of IPOs and what they could look like. Jeffrey, thank you for joining us.
Thanks for having me again.
Great. So where are you calling from today?
I'm in New York.
That's great. Cool. Well, let's just jump right into it. Let's talk about, your global IPO thesis there. What is a global IPO actually mean in practice? And why do you believe it represents a structural shift from just an incremental evolution in how companies access public capital?
I believe that the capital markets are going through a fundamental shift, probably the biggest shift we've seen since the year 2000. And the main element there is globalization of the capital markets. We're seeing technology create an incredibly interconnected market. We're seeing demographics create vast amounts of wealth outside the US and all over the world. And we're seeing geopolitics and regulation change the way institutions look at how they're getting exposure to equities. So it's a really, really exciting time for companies that are considering moving into the public market.
Great. Well, you've spoken about the corrosive impact of companies remaining private for extended periods of time. What value does that destroy in practice, and for whom? The founders, the employees, or early investors?
In many cases, for everyone. This is something I've experienced firsthand. My first company, we merged with another company. We bought a third company. We went public before 2000, and it was a wonderful process. It gave us access to talent, raised our profile, lowered our cost of capital. But the second company I started, Mimeo, we were planning to go public. Then the internet bubble popped, regulations changed, the structure of the market changed, and that company's still private today. And what we found as a private company is that we had a more brittle capital structure. It was harder to attract talent. Acquisitions we wanted to do became impossible because of the complexity of our cap table. And you can get misalignment on amongst investors. So we are big believers in the cleansing effect of moving into the public market, simplifying the capital structure, and giving a company that sort of resilient, flexible structure that they need to execute. And I've also witnessed it firsthand as an angel investor. I have angel investments that are doing great, but are in some cases 15 years old. So it's nice to see a properly functioning public market where capital is being recirculated.
Right. Well, companies like Oracle, Salesforce, and AOL went public much earlier than what is common today. What made that possible then, and what would we need to change for founders to do that again now?
Yeah, I mean, when Oracle went public, it was not yet a unicorn. It was about $250 million company, and it's gone up 3,200 times. So great fortunes have been made by investors of every type in the public market with Oracle, and I think that shows the potential for society, but also for companies if they're able to move out into the public market earlier. But what happened was we had a structural change. We had decimalization in the US. We had a wide range of regulation. We had the Spitzer settlement, which reduced the amount of research in the US. And it became really expensive to go public. And there was a lot of litigation, which was another disincentive. So you really, in the US, needed to be a mega cap company if you were a US company listing in the US. Ironically, international companies listing in the US have a different standard and a different cost structure and a different litigation profile. So that the US, you can be smaller. But what's happening is technology and changes in regulation and the connectivity to international investors is making it attractive to list again, which is great because it raises the profile and credibility of the company. AOL is a good example. I remember years ago, my aunt telling everyone at Thanksgiving how great AOL was. And she was both a customer and a shareholder. And you could not have paid her to be such an evangelist, but as a shareholder, she was out there looking out for her company. And that was exciting times where you could have an investor base earlier in your life cycle. You didn't have to be a mega company to go public. And I think that's where we're going again.
Great. So walk us through how the GPO fund helps portfolio companies, build a foundation of institutional public market investors across different countries well before an IPO takes place.
Yeah, so we started the fund in 2018, and really it was around two observations. One is we had been doing a lot of business outside the U.S., and what we found was that when you did business in multiple jurisdictions, it opened up all sorts of opportunities around talent. It opened up all sorts of opportunities around customers. But then the other thing we found is that by having investors in other parts of the world, those investors actually helped you identify opportunities, find talent, navigate regulation. So we became big believers in not only doing business in multiple jurisdictions, but also in having investor base that's more resilient, more diverse, and more global. And what we also discovered is that, which caused us to start the fund, is that when you have international investors, it can help you with the running of your business. So we started our fund. We were very deliberate to make sure that many of the family offices backing us are from outside the U.S., so that we have those extra tentacles out there to help our portfolio companies navigate the world. So if we're doing our job right, we're helping our companies accelerate international expansion, while simultaneously, when you have a global investor base, accelerate IPO readiness so that they can use that as a funding and publicity mechanism when the time is right.
Well, you noted that hundreds of millions of people are entering the middle class around the world. How is that demographic shift changing the supply and demand dynamics of public capital markets today?
I think that a lot of U.S. banks haven't kind of woken up to it yet. I'm talking to investors around the world, and they're really hungry to get access to U.S. IPOs, but to get access to high growth companies wherever they're listed, and we're seeing every payroll cycle billions of dollars showing up in the retirement accounts and in the investment accounts from those emerging middle classes. But also in a lot of the world, wealth is younger and it's more wired. So it's also going to the Robin Hoods of the world. So you've got a retail active community, not just all over the world, that can play an important role in pricing and also in discovery and communication about a company. And then you have their retirement accounts, which are small enough that they can take sizable positions in smaller IPOs, and it matters to them. Yeah, a lot of the big funds in the U.S. are so big they can't participate in an IPO unless it's a massive IPO. So you lose out on those sophisticated investors unless you're really, really big. But there's a lot of sophisticated investors once you make sure that your IPO process involves investors from all over the world.
So how should founders and investors think about navigating the regulatory landscape, across the different jurisdictions? Where do you see the greatest opportunities today?
Well, I think it's very dependent on what the company is. Yeah, I think one of the things that excites us is regulators move at different speeds in different parts of the world. I started a fintech company based out of Singapore, and I had regulators in Colombia saying, we want to help you. How you're helping our citizens? How can we help you grow faster here in Colombia? We had invest regulators in Indonesia take us into all their banks and say, you should work with these guys. These guys are doing this correctly. So that's very different support that you might get from regulators depending on your industry and depending on your jurisdiction. So I think that diversity of regulatory speeds and perspectives allow you to innovate faster than if you're dependent on just one regulatory perspective and you find yourself waiting for approvals. I mean,
Right.
another example, I was in Abu Dhabi and they introduced me. They said, well, we can introduce you to the appropriate regulator on Tuesday, but we're terribly sorry, Mr. Stewart. If we need to change the law, we can't do it till the following Thursday. So, very, very different pace
Wow.
and in different jurisdictions. And I think if there's, one thing that I find amongst the best entrepreneurs is a healthy impatience. They want to change the world as quickly as possible. And I think when you're doing business in lots of jurisdictions, you find yourself, waiting less.
That's great to hear. I didn't know that existed. So you've spoken about the impact of AI, blockchain, and cross-border telecommunications on global capital markets. Which of these forces do you think is the most underappreciated by investors right now?
I actually think AI is still underappreciated. For exchanges, there are many exchanges around the world looking at how can they use AI to ease the burden of going public and to ease the burden of disclosure once you're public. So the existing exchanges are competing with each other to be more efficient. And there are, world-class exchanges out there you can be public as fast as 14 weeks. So, the speed and quality varies, but I think the adoption of AI to improve the process will vary. Also, along the lines of the exchanges, is there's a range of new exchanges that are, thanks to AI, making good headway on launching. Here in the US, you've got the Texas Exchange as an example. I don't know how much they're using AI, but it's a good example of more competition. And then more important, on the investor side, it has never been easier to discover companies that match your thesis, and it's never been easier to analyze those companies. Really, really powerful tools in the hands of smart people all over the world. So I think this is going to create a much more liquid market thanks to AI. And telecommunications underlines all of that. And you have companies like Alpaca, which are stitching together the exchanges. Just yesterday, we're recording this on May 8th. You saw interactive brokers, plugging into South Korea. Just like the US has become a giant pool of capital trading amongst the exchanges, you're now starting to see the exchanges all over the world interconnecting and becoming just a giant pool of capital.
So what do you think the impact of blockchain is at this point? Is it major? Is it increasing, decreasing? Where's that going to land?
We're going to see a hybrid environment for many years. The legacy is not going away. That said, even today, if you're not a US citizen, you can trade tokenized equities, like NVIDIA is traded outside the US, fully backed by NVIDIA stock, custodied outside the US. So you're going to see tokenization occur. I think first you'll see regular listed equities that are fully backed and traded. You're already seeing that. Over time, I think you'll see secondary offerings for listed companies, and eventually someday you'll see full IPOs where the issuance are tokenized from day one. But I think that the biggest opportunity is actually to reduce risk in the market. This settlement that takes a few days to settle creates risks. And if we can get the whole system or more of the system to T+0, there'll be just less malfeasance, less fraud, less naked shorts, and just a better, more transparent market for everyone.
But do you think tokenization is going to draw more investors in because there's more options and then there's more liquidity, or is that how that works?
Absolutely. There's a group of investors that it's better for. I think, over the last half a decade, we've gone from a system where countries trusted each other to a system where, countries suddenly seize each other's assets. We've seen it in gold, we've seen it in treasuries. That affects clearing and settlement. Yeah. The reality is it also changes in, we here in the US with our big, beautiful bill, we were threatening to essentially seize Canadian assets or in the form of withholding. Yeah, I've talked to institutional investors in Canada. They're not happy, right? So, tokenization is a mechanism for a class of investors that find that easy or appealing for a wide range of issues.
That's interesting.
Reasons.
So, yeah, so you've been on both sides of the table. How has your experience building and scaling companies shaped the way you evaluate and support founders at the GPO fund?
Well, I think having started several companies, I believe that the scarcest resource is time. There's so much opportunity when you're growing a business. There's so many things to do. So I think we at GPO Fund try to support the founders and save them time because they're time starved. Every founder is time starved. I think I've always, as a founder, put a really high premium on getting great people. And I think as we look at companies, look closely at the founding team's ability to attract talent. It's really, really important to us. We're technical, Many of the companies I started were software or AI. So, we like teams that love technology, that are they're scientific engineering mindset, and I think that's a big part of how we evaluate teams that we choose to work with, and of course, ambition. I like to say the best founders are slightly delusional. We want to bet the next Larry Ellison. Larry Ellison didn't say, "Oh, gee, I could, sell my company to IBM and I could become a regional manager, mid-level executive at IBM." He said, "Why can't we be one of the most important tech companies ever?" Those are the types of founders that we want to back, and the types of teams and ambition that we want to support at GPO Fund.
That's great. So, beyond the financials, what qualitative characteristics do you look for in a founder of business that signal their position to benefit from an earlier multi-jurisdictional public offering?
It's definitely not for everyone. I think we look for, is there a reason to move into the public market, and not just multi-jurisdictional. We think that if you're going to move into the public market, it's important to make sure you have a diverse investor base, and that you think about international investors, and don't just go talk to the investors that your banker happens to introduce you to. You want to have a long-term strategy to build relationships with investors from all over the world. But that said, it doesn't always make sense to go public. There has to be a benefit. And is your product something that public markets are going to understand? Is your business model something that the public markets are going to understand? Is it going to help you raise your profile? Now, I was talking with the team at Raspberry Pi, and they said they went public, sub $2 billion valuation. And once they were public, a whole new class of customers started approaching them because there was new information in the market. It raised their profile, and customers come in and say, "Oh, we didn't really understand that your product could solve a problem we have." And that wouldn't have happened had they not gone public. So at the end of the day, most problems aren't money. Most problems are, can you get great talent, and can you get more paying customers? And I would look at the strategy and say, does moving into the public market support the strategy as it relates to getting talent and as it relates to getting paying customers?
Right. Well, I had a trading company come through once, and they claimed they could not sell their product to some companies unless they were a public company. And that was the whole reason they went public on the NASDAQ. And I thought that was interesting. You would have to do that in order to even get into the channel to sell to some. I think they were selling to the big companies like the Fortune 500. And so it seemed like it was a take it to, the next level up. How often do you think that happens?
Yeah, I think it happens quite a bit. I think it happens quite a bit. Probably less so here in the U.S. We've sort of that classic adoption curve, early and late adopters. But as you move outside the U.S., I think there's a lot more skepticism and hesitation to work with startups. So when you move into the public market, it opens up a whole new set of customers internationally, regardless of where you list. The other thing is financial transparency. There's a whole group of companies that would be skeptical or know that it's more work to do business with you because they have to document your financial feasibility. And the other big thing is just discovery. If you're public, there's probably a customer somewhere in Japan who would be perfect, who's just not going to find you unless you're there in the public market, because the opacity of the private markets mean that they're not going to find out about your product.
Right. What about life science companies, especially the therapeutics that go public without any revenue because the cost of clinical trials is so high, they just have to go to the public markets? Is that a good strategy?
We're not a expert in that, and I like to say, when I hear phase one, phase two, I phase out. So I wouldn't be the right person to talk to. But what we have seen is that the clinical trial process can be very different in other jurisdictions, and what certain treatments that the U.S. would consider incremental because of the cost or because of local conditions or local standards of health can be transformative in other jurisdictions. So you get lots of attention and the ability to fast track, and you're not waiting for paperwork from the regulator. So I think that the old days of let's get approval in the US and worry about the rest of the world later doesn't work. Now that so much wealth is outside the US and so much regulatory activity is occurring outside the US.
Great. So where do you see the global IPO market in, say, the next 5 to 10 years? What's your advice to give to a founder today who wants to position a company to take advantage of that shift?
One of the luxuries of writing a book on capital markets, Global IPO, The Great Rewiring of Capital Markets, is I got to take a step back and look at the last 400 years. And what you see is that public markets aren't going away. But what you also see is that they go through waves of change and innovation. And, one of the big ones was the telephone. It used to be every town had their, all the big cities had their own exchanges, and then they started to consolidate around long distance in the phone call. And then the computer changed it with the NASDAQ, which really turned the US market, where you used to have a Philadelphia exchange and a Cincinnati exchange, really created the national, the NASDAQ. What we believe is that because of technology, we're about to go through a whole nother shift of changing the IPO process. And what I believe you're going to see in the next 5 years is companies going public earlier, more often. And we're going to see companies move into the public market and then become decacorns. So that to me is really exciting, because I think capitalism is participatory, and capitalism works best when the most people are involved, and that it's very empowering. I think the other thing is, interest rates aren't zero anymore. So we're about to move into a phase where every sector, all 11 sectors, are going to be completely restructured due to AI, and that's going to take capital. There's going to be a lot of investment in the next 5-10 years, and the private markets are 1/9 the size of the public markets. We're going to need the public markets to fuel that retooling of all these industries. It's going to be really exciting, and I'm excited about the opportunity for founders, and I'm excited for the opportunity for investors.
Well, great. Well, in the last few minutes that we have for today, what else should we cover that we haven't?
Yeah, I'm of course excited about the book. I've gotten some great feedback so far. Yeah, I tried to make it for investors, and particularly public market investors, as well as venture capitalists, and for founders. But I think, because most of my life I've primarily seen the world through the view of an entrepreneur and a founder, I think it really is designed for founders, and I've gotten great feedback from founders on the book. And probably the most consistent feedback is this view that a IPO is not a wedding party, in the same way that a marriage is something that lasts a long time. You get to know someone and you're building a long-term relationship. And that's the public market. And I think that the theme of building a long-term relationship with the deep pools of capital in the public market over time, as opposed to viewing the IPO as an exit in a one-day event, is something that consistently I've gotten good feedback on from the book, and I hope others enjoy it too.
Great. So how best for listeners to get back in touch with you?
It seems like on LinkedIn, on Twitter, through our website, gpofund.com. And we love to hear from founders who have achieved product market fit, are scaling, and are ready for growth capital and expanding into international markets.
Great. Well, we'll include all your contact details in the show notes. I want to thank you for joining us today, and hope to have you back for a follow-up soon.
Great. Looking forward to next time.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.